I hope the private student loan market makes it a little bit easier for graduate students to take out loans in their own name, and here's why. Right now, the private student loan market is dominated by parents that are trying to borrow for their kids' undergraduate education. The vast majority of private student loans are co-signed by parents for kids going to undergrad. And there's nothing wrong with that because undergrad actually has extremely low limits on what you can borrow in your own name. So Stafford loans only allow you to borrow a few $1,000s per year, and with the high cost of college, that's really not that much. So a whole bunch of families are left looking for alternative options, and right now, Parent Plus loans are like 7% interest, 4% something origination fee, so it's super expensive, and there's not really easy access to certain income-based repayment programs. So it makes it really incentivized for parents to just try to figure out a private loan for their kid. Now, what's interesting is if you look at the last recession for the performance of these private loans, the default rate and the delinquency rate on loans that were issued to parents for undergrad, for their child's undergrad education was really, frankly, pretty high. It was, I think, still in the single digits, but it was very elevated. It was about triple the level of what it was for private student loans for graduate students. And traditional underwriting does not look at the risk of alternative metrics, right? So people like to look at FICO scores, they like to look at, current income, and grad students have a potential 40-year career after they graduate with a very high probability of making a high income with a very low unemployment rate for somebody with an advanced education. So I would love to see more and more private lenders moving to a model where you charge 0% under origination fees, and then you offer interest rates in the 4.5% to 6% interest rate range that are lower even than Stafford loans. And then I think that would allow people to push back a little bit on the cost of education when you're directly feeling it and you're not taking it out through the federal student loan system, where the cost is really not as connected to the actual cost because you're not really feeling it when you don't expect you'll have to actually fully pay it back because you have these income-based options to pay your loans back with. So I think for a lot of people that are in graduate school, specifically ones at in-state programs that are at the cheapest locations, you could really benefit by having a private student loan that you can take out in your own name with a modest interest rate, right, of like a 4 to 6%, which is possible in today's economy. But the only way that's going to happen is if more and more lenders move towards an underwriting model where you do not require a cosigner. And I hope that happens more and more. There's some companies doing this right now. If you want to check out to see if you could potentially qualify for any of these companies, just go to studentloanplanner.com/private, and you can check out some of the leading private loan lenders right now to see if you could get loans with no origination fee and interest rates below 6%. If possible, if you can do that and you're going to owe less than 1.5 times your income when you graduate and you're going to work in the private sector, and I think it's probably a no-brainer if you're fairly financially stable to use the private loans to get the lower interest costs. Just make sure that you do not need the benefits of income-based repayment and loan forgiveness when you take out private loans, because that's a really, something that you really cannot get back. If you choose the wrong loan type, you can't undo it later. So, private student loans are great for graduate students that are going to owe a very modest amount of debt compared to their income, are going to pay it back in full, are going to work in the private sector, and are going to have very stable jobs post-graduation. So hopefully the private student loan market can fill in the gaps there and try to improve their offerings to people. And at some point, I think that there might be a situation where the government will cap borrowing, which is badly needed in my opinion, and then people will actually have to look at other financing sources for their education. And hopefully the private student loan market will be there as an option that has updated their underwriting models to reflect the fact that graduate students are at very low risk compared to even undergrads with high credit quality cosigner parents. So if you have any questions about private student loans, leave a comment in the blog post in the description below or in the YouTube comments below. I'd love to hear what you're thinking.